Buza Commissioner.
Now, let me just take a moment to explain how, because he asked the other reason, how do you calculate? So he asked, why are there many taxes? Then number two, how do you compute the taxes? Now, for income tax, as an example, the shorthand for individual income tax, which is personal income tax. For this individual income tax, there is a threshold below which you do not pay any tax. So any individual who earns an income that is below 2 million, because the basis for this calculation is based on a monthly income, 820,000, this individual will pay nil tax. And if you want to compute this on a monthly, this is equivalent to someone who earns 235,000 per month. The way we have an exemption, when your income is above this, but is below 4,020,000. So you are above, an individual X here earns above 2.82, but is also below 4,020,000. Okay? This individual will be taxed at a rate of only 10%. So for you to calculate the tax of this person, let me go to the next page. So my gross income is 4 million. 4 million, and I hope we understand what we mean by gross income, because we will get all our income in a given year, take off all expenses that relate to earning that income. So an example, if you are a trader, you'll take off the cost of your goods. You'll take off the cost of your rent. You'll take off the cost of your power. You'll take off the cost of your salaries. And after you have removed all those costs that relate to your business, then what remains is gross profit. And out of that gross profit, you pay an income tax of only 10%. This one will pay. And how do we calculate this 10%? First, we get the 4 million we have earned as a gross profit in a given financial year. We subtract the 2,820,000, which is the exempt threshold, because government wants everyone to take this benefit. And what remains here is 0.00008. Here there's 9 left, 1, and here 1. So when we remain with 1,180,000, this is what is taxable. And out of this, we will only charge 10%. So times 10%. 10% means it's 10 over 100. So this one goes, this one goes. And what do you stay with? 100. What stays is 100. 100,000. 100,018. So somebody who earns a gross income or gross profit, of 4 million will only pay tax of 118,000. And if you're a business owner, you have sorted your obligation for the whole year. So supposing we have someone who, after all their expenses, their gross profit per annum is 4,900,000. They will definitely be falling in this range where an individual earns more than 4 million, but less than 4.92. Okay? And here, the formula that is used is that you will pay, first you will pay 120, and then you will add 20% of the amount that is in excess of the other lower threshold, which was here, 4.020,000. Okay? So for this person, you'll pay 120,000 plus your income now, which is 4.9 minus 4.02 4.02, and this one will be times 20%, meaning 20 over 100. And you can also do this calculation. This is 120,000, 120,000, plus this minus this times 20%. 900 minus 20,000, the balance is 880,000. Then times 20%. So what does this come to? It comes to 0, 0, 0, 16. We take 1, 17. 16 plus 1, 17. 176 plus our 120,000. What does this come to? This one comes to 0, 0, 0, okay, 6, 9, 2. So somebody who has a gross profit of 4.9 in a whole year, you'll pay less than 300,000, 296, and you'll have sorted your obligation.
Buza Commissioner.